Hey there, everyone. Happy Monday and welcome to the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a rainy Redmond, Washington. Thanks for joining us every weekday after the close as we break down the market action using the best practices of technical analysis. The technical toolkit really is designed to empower individual investors, financial advisors, and really any market participant to better understand market dynamics by focusing on price action. Price is truth, price is fact. Price tells you what's happening because of the interplay of buyers and sellers, of fear and greed, all those different emotions that we tend to focus in on through our analysis of charts. Today's sort of a choppy day. The S&P closing yet again above 5,000. So we'll wrap the show with a brief trumpet performance as we run the closing credits. Be patient with your host who has not played trumpet actively in a couple decades, but we'll do the best we can. Let's talk about the market recap here and focus on how the market's evolved here on a Monday afternoon. Do want to point out a poll question that we asked you recently. We said, which sector would you most want to own for the next 3 months? Technology, financials, energy, or consumer staples? Over half of you said technology. And for me, the time period that we reference in that question is crucial, right? If you said, which sector would you most want to own for the next 1 month or the next 3 weeks? I don't know if I would answer technology just because these things have had such a run, and we're in a seasonally weaker part of the year, which means pretty reasonable to expect a bit of a drawdown here at some point. But with 3 months, that would basically get us through, let's see, February, March, April, May. That gets us to sort of the spring months. This is when the market, certainly in an election year, tends to actually be pretty strong in that period of the year. So I would say that technology, probably a pretty decent bet. I probably wouldn't say consumer staples, and financials only got 6%. So on these polls, I love to see what most people voted on. I love to see what no one's really thinking about. And financials are an interesting one because we have inflation data tomorrow. We have the January CPI number coming out. That has certainly market-moving potential. Certainly the biggest, I think, economic data we're going to get this week, and this would be the latest follow-up after the Fed's January meeting to see, are there implications for the Fed taking more aggressive action in lowering rates? Is it higher for longer? Heated up inflation data tomorrow could certainly change the dynamic of this market very, very quickly. And if rates remain higher, financials are actually pretty well suited to take advantage of that. Something to think about as you're going through the answer to that poll. Let's get on to the market action today. As I mentioned, sort of a big move higher in the morning, the afternoon session. The S&P giving back all of those gains and a little bit more, but still finishing pretty much where we were on Friday. We're sort of in a wait and see mode, I think, until tomorrow's CPI number. And again, what's interesting about that is one that Fed governors have really talked about focusing on, right? Chairman Powell has spoken about how that is a key number that they pay attention to just to think about inflationary pressures and how the actions that they've taken to date are being expressed through higher or lower inflation readings. So can't overstate the importance of that data tomorrow. So the S&P essentially down 0.1%, still above that 5,000 mark, which is a pretty impressive way to end last week. Currently around 50.22. The Nasdaq Composite down about 1/3%, just below 16,000. You can see mid caps and small caps actually having a pretty decent day. The small cap S&P 600 is back above 1,300, and that's up almost 2% actually. So far outpacing the S&P 500. The VIX actually pushing a little bit higher here. We're just below 14, and that's an interesting one to watch here. So, to start the week, we have the VIX pushing up a little bit. Now, the volatility is still relatively low, right? So if you think about the normal range of volatility, what I would consider a low volatility environment, anything below 15, to be honest with you. So here in the low teens, we're still in a low vol environment. VIX gets above 15, gets towards 20. I think that's a little bit of a danger sign, suggesting that there's elevated uncertainty. VIX over 20 for me has always been the basic level at which point you have to think, okay, this is now a period of rising uncertainty, rising fear, and most likely risk assets coming down. So for now, certainly something to watch through the course of this week, potentially tomorrow after the inflation data in the morning. Interest rates overall moving lower, 5, 10, and 30-year points coming off, but just slightly, not too much of a change. The 10-year Treasury yield is just below 4.2%. The 5-year yield closer to 4.1%. The short end of the curve still very elevated, so we do still have that inverted yield curve. Certainly appears that we will have that for quite some time here. One of the best predictors of a recession is an inverted yield curve, and here we are for months and months and months with this inverted yield curve. Bond prices, of course, moving slightly higher. The dollar, not much of a change from Friday's close. Looking at the commodity space, the DBC essentially flat for the day. Gold slightly lower, about 0.25% down for the GLD. Silver prices up about 0.4%. Copper and crude oil prices all up as well. Natural gas is a pretty volatile space and a volatile ETF. The UNG was down almost 6%. And you'll notice, speaking of energy, the energy sector actually one of the better performers, just behind utilities. Finally, cryptocurrencies, all in the green. And look at Bitcoin. We talk about S&P 5,000 being a key benchmark that has now been, or a key level to be eclipsed. How about Bitcoin back above 50,000? Now, this is fascinating because what that means is that Bitcoin has popped about 25% just since that initial drop, right? So the Bitcoin ETFs come out. Bitcoin dropped very quickly to just below 40,000. Now, all of a sudden, not too much later here, we're a month or two later, and Bitcoin's back above 50,000. So about a 25% gain after that initial sell-off after those ETFs were released. So we've talked about the long-term structure of Bitcoin quite strong, and you're certainly seeing that upside follow through that we've been anticipating. Finally, looking at the 11 S&P sectors, you can see Utes at the top of the list. And again, this is just one day. Let's keep a proper frame of reference here. The utilities are a very defensive sector, and when utilities start doing well, that usually tells me to be a little bit cautious because it's a defensive sector that would be thriving. So this is just one day, but utilities were the top of the list today, up 1.2%. A lot of these utility names are pretty beaten down, so they're coming off of pretty beaten down levels. Same can be said for energy, up over 1% as well. Materials rounding out your top three. So sort of a defensive feel to the top of the tape, I would say. On the downside, and this is why our benchmark struggled through the into the close, technology down almost 0.8%. That's the XLK. Real estate, number two, and consumer discretionary third from the bottom, but essentially flat from yesterday's close. Looking at our market trend model, and this is a model that we've run for a long time, but just recently as part of our Edmunds product update, the good developers here at StockCharts were able to add this as one of the widgets on our dashboard, and this is honestly just the beginning. There's a lot of really cool stuff to be planned with this, but this is basically showing the three time frames that I pay attention to: short-term, medium-term, long-term, and looking at 4 different groups of stocks: large caps, mid caps, small caps, and the NASDAQ, so sort of a technology growth focus. You can see all green arrows, which basically means on all the time frames that I'm looking at, the trend is very strong. So as we talk about the market being overextended, we talk about the run that has been the reality of the first 6 weeks of the year, led by names like NVIDIA and Meta and other growth names. This is what is creating this sort of across-the-board bullish reading on our market trend model. At some point last week, sort of midweek, the short-term turned negative briefly for the mid-cap and small-cap, but by Friday's close, back in the green. And for now, it's telling me that the trends overall are quite positive. I just want to highlight here, this is a group of stocks I call Magnificent Seven and Friends, and it's basically looking at some of the leading growth names, sort of that bucket of mega cap growth stocks. And again, these names are probably, I don't know, the weight in the S&P, but a big weight. And I would say that these 8 names are probably the same as the bottom 400 or so, 350 to 400 stocks. There's a lot of market cap represented here. You'll see that most of these are down. Tesla at the bottom of the list, down almost 3%, followed by Microsoft and Amazon, both down over 1%. So these aren't end-of-the-world moves just yet, but certainly something to watch because the market rally we've seen in the first 6 months, first 6 weeks of the year, that is, from the end of 2023, really driven primarily, I would argue, by the strength in these growth stocks. So if we see a lot more red than green on a week like this, watch our benchmarks come down pretty aggressively, I would say. All right, let's look at a daily chart of the S&P 500. This trend line right here is what I've highlighted. And, this is a simple trend line that I think tracks the pace of this move, right? When you think about, tracking a market in an uptrend, I think you have a couple things to think about. Number one, make sure you let your winners run. So to be clear, anytime you pick up a cautious sort of bearish tone to my analysis, this is always looking for, counter trend moves. This is looking for contrary points of view. This is me recognizing that the market is quite strong, so I'm looking for any signs that maybe this uptrend is near an exhaustion point. And things we would look for would be breadth conditions deteriorating, which I would argue we've certainly seen here in the last 6 weeks. Something like the Hindenburg Omen, which I featured on my YouTube channel on Friday, called Market Misbehavior. Focus in on the Hindenburg Omen, which did flare up last week for the first time. But overall, from a trend following perspective, we're making higher highs and higher lows. And I think what this trend line is meant to remind me of, and I hope remind you of as well, is when you have a market in an uptrend, drawing a trend like this, trend line like this, while I don't think it's the world's most perfect trading system, I would not manage a portfolio based on this particular trend line alone. But watching this line every day, every week, and looking for when the S&P breaks down through that line, that just tells me something's different, what we call a change of character. This is why we had this trend line drawn from October through November into December. And when we broke through that trend line support in late December, that told me, all right, this uptrend that I've been tracking is now different. Something's changed. And that's a good time to reassess and reflect on where we're at and think about key levels, which we did. Then we resolve to the upside. We draw a new trend line off of these new lows. You can see we've connected 3 of these points. And for now, I think that's a really good visual representation of the pace of this uptrend off of the October 2023 low. So until that line's broken, things just aren't getting that bad. As a matter of fact, things are actually quite good because that would mean we keep making higher highs and higher lows. And that is what an uptrend is really made of. I want to look quickly here at the chart of Bitcoin. We've been talking about Bitcoin, of course, off and on through the natural course of the show. But I just wanted to point out the fact that it's really essentially retraced 100% of that drop. This is that drop that I mentioned. So here was the optimism fueled by the expectation that Bitcoin ETFs, spot ETFs, would be released. Right there is where we actually saw the Bitcoin ETFs be released. And I had Adrian Zadunchik of the Burb Nest on there in December. We talked about the prospect, and actually literally the week they're coming out, I think it was in January actually, the week they were coming out, I remember talking with Adrian about what that might mean. And as we were going live with the show, we're looking at the headlines coming through to see if they'd formally been approved yet. It turned out they had been. We got sort of the news fleshed out over the next 24 hours, and Bitcoin got rocked very, very quickly. Now, I would argue that was more of a recognition. This is more of a buy the rumor, sell the news, right? It finally was approved. There was a lot of optimism that was already baked in, and a lot of rotation around Bitcoin and Bitcoin products. So the GBTC lost a ton of flows because up until that point, that was really the only vehicle to kind of have a direct bet on Bitcoin. Now we have a bunch of other ones from other providers, and so a lot of things sold off. But look at this, we've now retraced 100% of that downtrend and more. Bitcoin now back above 50,000. That's the first time we've been up at this level since the end of 2021. So it's been 2 years plus since we've been at this 50,000 level. Talk about an incredible round trip from upper 60Ks down to 16,000 and now back to 50,000. I think once we clear this 50K level, which I would say still an open question, then I think you unlock the door to further upside potential. 60,000, the next big round number, I think is your next objective. We've gotten above the last Fibonacci retracement if we can hold above 49,000. So overall, pretty constructive chart. Overbought, of course, so you expect pullbacks to occur, but look for that higher low, look to see if we can keep building some of that momentum to the upside. I do want to go to our new market carpet. Now, we've had a market carpet tool on the StockCharts platform for quite some time, but this, among other things, has gotten a pretty awesome facelift here recently. So this is the market carpet. So this is basically looking at one-day percent changes on the S&P 500 members. And what I wanted to point out here today is look at all the red in these big boxes on the left side. Now, this market carpet is a heat map, and the size is reflective of the market cap, right? So the larger the box, the bigger the stock. So you can see some of the smaller ones where you can't even read the ticker. Those are some of the smaller names within the S&P 500, just a little too small to sort of register a signal or register a ticker on here. But as you go through, look at the technology, communication services, discretionary, and you can see that the largest boxes are some of the brightest red. Now, Tesla is one of the worst performers today, down almost 3%. But look within technology, there's a lot of red, and we can go within technology a little bit more to note that most of the things, many of these larger names are down. Note how NVIDIA actually narrowly ended the day in the green, just barely. And I think that's important to watch because semiconductors, certainly a leading group within the technology sector, kind of a bellwether group. So that's certainly an important one to watch. Adobe is a really interesting one, though, down 2.5% today. I want to jump into the chart of Adobe just to show, just to show how, as we've gone through, you can see that Adobe is actually testing resistance right here. This is Adobe after breaking out of resistance here. This is around, we'll call it like 580 or so. We broke above 580 there in November. Now at the upper end of the range, you can see we're testing this resistance here at the top, which is around, we'll call it 620, 615, 620. So, with this pullback, we're actually pulling back from this high at the beginning of February. This lines up very well with the high at the end of December. So while a lot of growth names have actually been already breaking to new 52-week highs, Adobe is one of those that has not yet. And so looking for stocks that are not participating in the gains of other growth names, I think is important. Seeing if we pull back from here, do we get below the 50-day moving average? Worst case scenario, do we break below that January low? That would be a sign that maybe Adobe is really starting to rotate. For now, it's sort of pulling back off of a retest of a new high. I don't think that's a bad chart just yet, but that's certainly one that I would be monitoring for any sort of additional pullbacks there. Let's talk about semiconductors here briefly. The SMH, certainly one of the stronger groups that we've observed here in the last 12 months. Look at where the SMH was at the end of 2022. We're down around $100 a share for SMH on an adjusted basis. It's been a double, literally 100% gain since the end of December to where we're at now, the middle of February, 6 weeks into 2024. So a remarkable move, but I think the real telling breakout was here, right? Sort of the July high, and I remember when we were back here, we talked about, okay, we've now broken above that swing high. Can we hold it? Does this constitute a larger breakout? And that's certainly what we've seen. The SMH, I think, is a sort of a perfect chart to watch to gauge that uptrend of higher highs and higher lows. And look at how much room we have to pull back. SMH can go all the way down to 185 and still be making a higher low, which means there can be a pretty decent drawdown, 5-10% drawdown, and still be within the context of a pretty good uptrend. So I think that's something to pay attention to. Home builders are a really interesting one. And the reason why I wanted to highlight this group in particular is because it's just breaking to a new 52-week high today. We've talked about the home builder group. ITB is the ETF we've looked at, but a lot of the individual names certainly worth reviewing. Things like Lennar and Toll Brothers and NVR and DR Horton. And you can see that we tested resistance around 102 to 103. That's where we hit in December. And then from there, it reminds me a lot of some of the other charts we've looked at, sort of the S&P chart, where you had sort of this sideways move. With the S&P, you sort of caught between 47 and 4,800. We sat there for about 6 weeks before resolving to the upside last year. And you can see that the ITB potentially is doing a similar kind of thing, where we had that nice rally off of the October low, and then we're sort of in this range from around 97 to 103, really from mid-December now to mid-February. Now today, closing outside of that little rectangle and breaking out to the upside. I'd love to see if we can follow through in the next couple sessions. But overall, home builders actually setting up with a pretty constructive chart. Now, what's interesting is, as we've been moving higher, the momentum is actually quite negative. It's actually sloping downwards. This is the concern I've had for a lot of charts, is that the new highs recently have been marked by weaker momentum. Now, the way that this resolves itself in a very bullish way is that basically the price goes higher and the momentum increases. We get back to overbought. I would say that's actually a very good sign for home builders, because that means we're actually pushing to a new swing high and following through. Just a couple quick names as we continue through. We're sort of through the meat of earnings season, but still quite a few companies reporting this week. Tomorrow, 3 stocks I wanted to highlight for you: Shopify, Marriott, Airbnb. So 3 sort of in that Shopify in sort of payment processor type of group. Airbnb, Marriott, sort of that travel and tourism play. And if you look at the chart of Shopify, it's a very constructive chart. It was overbought on Friday, just barely, right at an RSI level of 70. We came off just slightly today, but just recently we broke out above a resistance here around 82, 83. This is a nice pop to the upside. And I don't remember if this was one of the 10 charts we talked about on our top 10 charts for February, but if not, it probably should have been. I know we've talked about it in previous of those monthly exercises where Grace and Rose and I identify names. I don't remember if one of us had Shopify or not, but this is certainly one I would be keen on following. Again, reporting, I think, before the open tomorrow. But overall, a pretty strong setup leading into that earnings announcement. Marriott's number 2, and this is another one just in this nice, consistent uptrend. Now, when you have a stock in a pretty slow and steady uptrend, I would argue that the further upside potential is going to have to, in some small or large way, be baked into earnings or be tied to earnings, right? Companies like this showing strong growth in their share price really need to be supported by optimism as reflected by the earnings report, right? If you have an earnings call where it's underwhelming and they talk about 2024 being a lot less strong than 2023 was, watch how quickly that a name like this goes from a nice classic uptrend to something really painful. It's tough to own stocks through earnings, and I would pay attention to these names if you do hold them, and make sure you use our earnings calendar. Focus on the full quote on stock charts where we point out when the company reports earnings. That's one to watch. And then Airbnb is our fascinating one. I would argue a fantastic setup going into their earnings report tomorrow. This is an inverted head and shoulders continuation pattern, which is actually kind of unusual. That's when you have a big rally, and then all of a sudden you have this inverted head and shoulders, which usually happens after a big downtrend. But this you would actually call an inverted head and shoulders continuation pattern. And the buy signal is when we break above the neckline, which is here around 150. So today, we're actually finally closing out of that neckline, breaking above 150. And as long as that's able to hold over the next day or two, this is a pretty strong setup. If there would be a disappointment in earnings tomorrow, I'd be looking at the 50-day moving average. Below that, the 200 days right around 131, 132. If we can hold those, and the chart's not horrible because that would basically remain above the January lows, but overall pretty strong setup going into their earnings announcement. That's our market recap for today on a Monday. A lot to talk about, and again, CPI data tomorrow. A lot of companies reporting earnings. There's no shortage of potential catalysts for these markets. As always, I hope you can focus on the charts because that's a great way to cut through the noise and just focus on the message of the markets. We're going to go on with our next segment here in a moment called Fishing for Alpha. We'll actually share a scan with you that we were running last week, what sort of results we came up with. Before we do that, just a quick announcement and basically a reminder. We'd love to hear from you, particularly your questions. We had an all mailbag episode on Friday. It was a lot of fun. I can't thank you guys enough for some really thoughtful questions. Include the chart that you're looking at if you wouldn't mind. So make sure you send me a link to the chart, and that'll allow me to look at the same thing you're looking at when you have your question in your mind. Our email is thefinalbar@stockcharts.com. That's the best way to get your questions to us, and we look forward to hearing from you very soon. Let's continue on with our next segment called Fishing for Alpha. This is one we actually used to do. We're having a lot of fun going through some of the old segments we used to run. If you're not familiar with the phrase alpha, and I was talking to our producer Sky here before the show about what alpha really represents. When you think about market returns, right, your returns as an investor, how and why is your portfolio growing? If you're investing in equities or ETFs, you basically can think of your returns as having two components, which are alpha and beta. And these are, terms that financial people of some sort decided was a good idea. I don't know. I didn't make them up, but I'm just telling you. I'm just reporting the facts here. Beta is basically the market return, right? So when you look at the chart of the S&P 500, that's beta, right? That is the return that you get just from owning a stock, just from owning some stocks, right? So if you think about it, the market overall is defined as the S&P 500, some broad ETF like the VTI, right? It's sort of the general return of the market. That's your beta. That is the market return. That is the overall benefit you get from owning stocks. But then you have an opportunity to gain a little more than average, hopefully, using technical analysis, and that's called alpha. That is your ability to generate returns above and beyond the return of the market. So if the S&P 500 is up 10% over a period and you're up 20%, you could probably describe that 10% of your gain is beta, and the other 10% to make up your 20% is alpha. That is your own return. So with this segment looking fishing for alpha, we're going to help you identify some individual names that could provide some opportunities. Many of the ones that we refer to in our market recaps could certainly sort of fit that criteria, but we want to think more actively about it. And what we're doing by using our scanning engine is doing what's called a bottom-up stock picking approach. What we often talk about on the final bar is what you probably call more of a top-down approach, right? Talking about the broad market environment, interest rates, the Fed. A lot of my guests were talking about whether you're bullish or bearish and what you need to see on the S&P. But a bottom-up process is basically forget what's happening on the market. Let's just look at individual stocks fitting certain criteria. And what I'm going to do, and hopefully we'll do this segment with some frequency here on the final bar, but what I wanted to show you is one of the scans that I run every single week. I usually run this every Wednesday as part of my own exercise to make sure I'm familiar with stocks that are breaking out or stocks that are breaking down. And it's a scan that basically looks for new swing highs. Now, there are two different ways. This is going to get a little bit into the weeds on our scanning engine, but hopefully you can hit pause or refer back to the video and replicate the scan that I'm showing here in the Stock Charts platform. But if you don't know the syntax, there's basically two lines, or really one line that I want you to pay attention to. The rest of this is just saying, I want a US listed stock, traded on a US exchange, market cap above 5 billion. I'm not looking at ETFs in this particular scan, and that's kind of your general universe. This line right here, line number 3, is the really important one. This is what I'm saying where the current weekly close is greater than the last week's maximum 13-week close, which basically, to rephrase, this week's close is higher than the close for the last 13 weeks. We're at a new 3-month or 13-week high. I do another scan where I'm looking at the weekly close lower than last week's minimum 13-week close. So I'm basically doing the opposite and looking for stocks breaking down. I'll run this scan here and I'll tell you a couple things that I use this scan for. Number one, I'm looking for how many companies are returned, very simply so, right? So look at this is the scan making new 13-week highs. As of this moment, 423 stocks in that broad sort of U.S. large mid-cap universe, so anything above 5 billion, 423 stocks fitting my criteria of making a new 3-month high in the last week. We can do this same scan. Let's run this one here, and we'll do the lows, so sort of the same scan, but just looking for the opposite. And you can see as I run the scan right now, I have 45 stocks that are actually making new 3-month lows. So 425 or so making a new 3-month high, only 45 making a new 3-month low. So that shows you that it's a 10-to-1 ratio of stocks making new 3-month highs versus those making new 3-month lows. And that tells you what a strong market we're in, that many stocks are actually going higher. We're going back to this 13-week new highs scan. I like to sort it by industry and then sector. And what you can do is just start to look through some of these names. And I like to group it by sector because I'm looking for similar types of stocks, right? I want to understand which types of names are coming up here. So when I run this, I'm finding names like DoorDash, arguably pretty extended, right? A lot of the stocks you'll find on a scan like this have already had a pretty good run. So we could include some other criteria to say, I want stocks making a new 3-month high, but I want them a lot closer to their 50-week or 200-day moving average. We can add an argument for something like that. My approach to looking for ideas, looking for scans, or fishing for alpha, as it were, is to run pretty broad scans. I'm just looking for a workable list of stocks, and then I like to go through the charts one by one to really think about what the results are telling me. So DoorDash is one of those names. A lot of names, growthy names like this. This is in communication services, of course, mobile food ordering, and you can see that the high from July, we gapped right up to that resistance level in November. We broke out, pulled back, and retested. And I feel like a lot of growth stocks kind of have this classic rotation, right? A basing pattern, a breakout, a retest, and this actually retested the breakout level and retested an ascending 50-day moving average, which we like, and now it's going higher. Now what's happening right now, which is the concern I have for this growth-driven market, is DoorDash is overbought, right? It's pretty far away from its 200-day moving average. It's had a really good run already so far, which means at some point we make a higher low. Even if the trend overall, the primary trend is positive, you're looking for sort of that December pullback, a 2-week pullback to the 50-day moving average. What a great opportunity that could be. If you missed out on this run higher in DoorDash, you're looking to find a better opportunity to come in. So looking for names like this that are overbought, looking for when we come out of that overbought region, that might be the signal that we have a tradable pullback looking for a higher low. That's what I'd be looking for on something like DoorDash. It was interesting as I was reviewing these before the show, that Walt Disney came up, Walt Disney Group, DIS, of course. Now, Walt Disney, a very different dynamic if you look at the last 2 years, right? DoorDash sort of this nice uptrend here over the last 6 to 12 months. Disney, anything but that, right? If you look, about 6 months ago, Disney's making a new 52-week low, right? Back in September, October, November of last year. I mean, just really languishing around $80 a share. Then things started to change. And if you look, earnings here in November, nice gap higher, sort of initiating that uptrend. That's what I would probably call a breakaway gap or an initiation gap, sort of that first move, sort of beginning a new uptrend. Look how we gapped above 85, which was the resistance here in September and October. The gap took us above that level, and we traded higher, up to 95. From there, we pulled back, had what I'd probably call a bull flag pattern, sort of this short-term pullback, and then we broke out of that pattern here in mid-January. Now, what's interesting is this stock came up on the new 3-month high list when I just ran it, because in the last week, right, the current weekly close is higher than the last 13 weekly closes, basically, is what that means. But you'll note that if I ran this screen back here in late January, this is when Disney was actually coming on my list. And that's what you have to remember. When I'm running the scan, I'm looking for this type of chart, right? Something that's actually just beginning to break out of an established base. I'm looking for something like an Airbnb, which is another name that came up on this list today when I ran it, because it's just getting above the highs for the last 3 months. So remember, the scan that I'm looking for is basically looking at this window right here. And I'm looking for stocks that are making a new 3-month high, which on this particular chart means it's not really happening until there when I finally am getting above this resistance, we pull back a bit, and then it's once again signaling when I run the scan today. So while I'm happy to look at a Meta or one of those really extended names, I'm really looking for things that are a little earlier on, right? Things that are just starting to break out a little bit, and that's why some of these names are a little more attractive to me. Now, what I also encourage you to do is go down through this list, right, and think about by sector. Think about what types of names are coming up. Here we can see a lot of clothing names like PVH and Levi Strauss and others having some pretty good runs. And what I love finding are examples like PVH. PVH, again, has had a really good run, right? We're at 130 almost a share, and that's about a double, if not very, very close to that when you look at where we were at the October low. So a lot of names have certainly had an incredible run just in the last 3 or 4 months. But look at what happened here, right? PVH was actually a really strong name in November and December. January was actually a wash. It was actually just sideways through that entire month. But what I'm looking for when we have this sort of consolidation, this chart right here reminds me a lot of home builders, right? You have the big run, then you have this consolidation, this sideways move. And what you're looking for me, the trigger, that's the setup. The trigger is when we break out of that pattern to the upside. That's what we're just seeing on something like PVH. Not overbought yet, and so that's the upside potential. I would say is that this breakout continues. We hold 125 on any pullbacks, and this is maybe the next leg higher, and the momentum has room to improve from here. So as we think about something and wrap this segment called Fishing for Alpha, what I would remind you is when you're looking at something like the scanning engine, this is an exercise in bottom-up analysis, just looking for stocks that have particular characteristics. And what I would encourage you to do if you're just getting started with this is think about a name that you really got right? Think about, let's think of something like, a name that's had a really good run, and you can picture in your head, that's not the name I meant, Apple. You can picture in your head, okay, right here, for example, is where I would have loved to buy Apple, or I bought Apple and I felt like a rock star investing genius because I bought it in March of 2023. Look at all the technical considerations, all the technical indicators, how they look and what the levels are when that ideal entry point was reached, right? What is the chart telling you about the stock at that particular point, right? In this case, for example, it's making a new 3-month high. The relative strength is improving. The momentum is strong but not excessive. So the RSI is above 40 but below 70. Now I'm starting to back into some criteria that I could put in a scan, and then I can start to run that scan with regularity and say, okay, let me look for another group of names with that same setup as my perfect storm Apple in March of 2023. So if you're struggling with what conditions to search for, just look for really good examples of some of your best trades that you want to replicate. Think about what signals would have helped you get into that name at the ideal time and start scanning for similar conditions. Hopefully that gives you a working list. For me, I like to run a pretty broad list and then go through all of the charts. And I would point out, by the way, in our latest Edmunds release, you can actually click on this button right here, immediately flip through all the charts that came up on your results. You can also click on Candle Glance and you get a quick little preview chart, which is a new feature we just added here in the last couple weeks. So right from the results of your scan, you can get a little more quickly through the charts, flip through those names, think about the ones that may be actionable, dig into those, click on them to drill in and get a little more detail. That's our segment, Fishing for Alpha. Hopefully we'll do that a little more often, share with you some ideas about things to scan on based on the overall market conditions in this environment. I'm always happy looking for 3-month highs, so I hope that helps give you some ideas of how you can look for ideas yourself. Let's wrap the show, folks, and go to the 3 in 3, 3 charts in 3 minutes that tell the story of this market environment. Here is chart number 1. I'm looking at some of the equal weighted measures, and when I'm looking at something like the RSP, which is the equal weighted S&P 500, when I'm looking at the NASDAQ 100, when I'm looking at offense over defense, right, the consumer discretionary versus consumer staples sector, all of those are positive, right? Those are all sort of trending to the upside. And I think one of the things that I would encourage you to think about is what are the charts telling me about the overall trend? At this point, the trends are strong, and I'm not seeing anything telling me the trends overall are anything but strong. They're actually quite strong. But when you have very strong trends, that immediately has me think about what would I need to see to tell me things are getting worse, right? Things are no longer rosy. And I would say the fact that the equal-weighted S&P and the equal-weighted NASDAQ are both confirming new 52-week highs in the last week confirms that conditions are good. Look for those to not confirm one another. Look for those to break down through recent swing lows. I think there's a lot of room for these indexes, these benchmarks, to have a meaningful pullback and still be within a fairly constructive long-term pattern. But for now, the trends certainly appear to be quite robust. Chart number 2, we're looking at defensive sectors, and I'm looking at relative performance here. So I have 3 series that I'm showing you. This is the relative performance of utilities versus the S&P. Here's real estate, the XLRE versus the S&P. Here's staples, the XLP versus the S&P 500. Note how all 3 of these series are very clearly trending downwards over the last 6 to 12 months. Again, what would tell you that conditions are changing? What would tell you there's a change of character in the markets? I would say these data series, which are clearly trending downwards, would stop trending down. They would start to turn higher, because if utilities and real estate and staples are turning higher, that would imply that institutional investors, those running accounts with a lot of zeros connected to them, are rotating from offensive bets like technology and communication services to defensive bets like real estate and consumer staples. That is a place you hide out when you're concerned about market stability. So I think a pullback in late February into March most likely would be marked by improvements on a relative basis on these sectors. The RRG would certainly show some rotation into these sectors, and this chart tells you we're not seeing that yet. But that's why I think it's an important chart to watch. Finally, Airbnb. As always, keep a focus on when companies are reporting earnings. We have an earnings calendar on Stock Charts, which I'd encourage you to experiment with. That's a great way to make sure that you don't miss the next company that's reporting that could be of interest to you. But when I'm looking at the chart of Airbnb going into earnings, pretty constructive technical setup. Excuse me, I think we have an inverted head and shoulders continuation pattern. That's when you have a run higher. You have the lows surrounded by higher lows. This clearly defined neckline, we finally broke above it today. I would want to see if we can hold that neckline on any sort of choppiness. 150 will be the level to watch there. That's it for the show today. Thanks so much for joining us every weekday after the close for the Final Bar. Keep your questions coming. Don't forget to send them via email, thefinalbar@stockcharts.com. And while you're here, feel free to like the video. We would very much appreciate that back. For Stock Charts in Redmond, Washington, I'm Dave Keller. Be well, stay safe, have a good night.